Hello, Mr. Mark Selby. How are you, sir?
Mr. Matthew Gordon, doing very, very well.
Good. I'm glad to hear it. You must be now resting at home. You stopped your jet setting, have you?
Yes, I've paused for a few days anyways. Next week I am doing some investor meetings in Europe, then home for another few days, and then on 2 panels at the Benchmark Battery Week conference in Los Angeles, which is the big benchmark conference. So it's great to be a part of that. So we're on nickel panel, and then on a ESG panel talking about our zero carbon initiatives, which is great. And then back over to London for 1-to-1 London the following week. So no, it's a busy month. So
fantastic. And you've heard Elon Musk's new phrase, Twitter is the new oil. You heard that phrase?
Yes. Yeah, exactly. From the chief twit himself. Yeah, there you go.
Chief twit himself. No. The thing I actually want to talk to you about is what's going on over in Indonesia. Obviously, we talked about molecules not having to travel too far. We also when Mr. Musk said that, everyone was all ears. But then, obviously, subsequent to that, we've had supply chain issues and new relationships being formed east and west. So, I'd love to get your take on what's happening over there. But first, let's get that nickel world update. What's happened out there?
Yeah. So last week, I said we're getting close to calling a turning point here. This week's data still in the right direction. I'm not ready to do it. Maybe another week or so. But the good thing is we saw nickel pop back up over $23,000 a ton twice. It went up once. The Fed whacked it back down. But good thing is it's back up today. Another 3-4%. So some pretty whippy news. And we're seeing LME inventories come off as down towards the most recent low. I think, coming out of LME week, people were, I think, a lot more optimistic about the near term. This surge in demand in China is very real. And I think, the continued tightness, the stainless steel market in North America and Europe is a slot mess right now. But the alloy part of the market is still quite strong. And so, you're not seeing any of the metal hit the exchange. And so, I think, said we'll see another week or two's worth of data. And then I think we'll call, one of those turning points where, again, I think this is the run up now to the next peak in this, the next leg up in this super cycle. So it'll be, I think a key point to get in.
Okay, but tell me this, right? We've seen in the world of uranium, it being a fairly opaque market. Same with cobalt, very hard to track and sort of see what inventory levels are, who's got what prices actually may be. Obviously, nickel, copper, and lithium, a little bit easier to kind of track. But in terms of current inventory levels, if some of the reports are to believe, sometimes occasionally days away from running out. So, how believable do you find them? Is there a little bit in reserve? How does the Chinese data release into the market, and who measures it?
Yeah, no, there's basically sometimes a little spin in the numbers, but there are pretty good timely data out of China in terms of what the market prices are, on a week-to-week basis. There's other agencies that look at premiums in the West, and post those on a pretty regular basis. So, between those, you're generally able to correlate pretty well between, where those markets are. Again, there's always a little bit of noise in the data, but, by and large, they are generally pretty good. But that the only time where they're not so helpful is if you get a producer or consumer who starts to build up, significant off-warrant stocks. But that's a little trickier to manage. But again, with the volatility in nickel prices and the cost of doing so, it's not as big an issue as it was, say, 20 years ago when the market was 1/3 the size. When it was less expensive to be able to get that kind of thing done.
Okay, so what then what Indonesia is talking about doing? What good would that do? They're looking to basically create their version of OPEC or ONEC, for the nickel space. So, well, first of all, tell us a little bit about why and why now.
Yeah, so the EFT had a story out this week that Indonesia was looking at creating an ONEC. Some hack analysts about 5 years ago talked about that probability. So I was very happy to see that actually, see that in a headline. No, fundamentally, again, we've had very little to no. Well, we've had shrinking nickel supply in the rest of the world. Indonesia, plus you can toss in Philippines, Russia, New Caledonia. Jurisdictions that have a few characteristics. One, they're short of cash, so they need ways, to raise cash. Two, they have no issue intervening in their mining sector to do, whatever's good, bad, from the government's perspective. And three, yeah, again, no issues really colluding from a free market perspective on stuff. So when you've got, I've got a chart in my nickel presentations that I, again, have used for 5 or 6 years, highlighting the fact that, when OPEC was at its peak, when they quadrupled prices, they controlled just over half of global supply. Today we're already at 60% with, any 3 of those countries in the mix, Indonesia plus the Philippines plus one of any of the above. And that percentage is only going higher in the next few years. So, if you have a critical raw material, you need to raise cash as a government. I think, it makes perfect sense to try and maximize, the value that's being generated by this resource in the country. I think it'll be interesting to see whether Indonesia flexes its muscles relative to the Chinese, companies there, because again, any rent that they extort from those assets is going to be coming out of potentially Chinese producers' pockets, or consumers in China, who are buying that material, or consumers elsewhere in the world who are paying up. But it makes non-Indonesian assets, whatever tax or royalty or whatever they put on it, just makes non-oil assets in the rest of the world that much more valuable. Going long oil in the United States in 1972 was a pretty profitable trade for 10 or 15 years. So,
well, let's talk about this bifurcated market, and whether that's through incentives or taxes. Because whether it be jurisdictional or whether it may be clean nickel, dirty nickel, however people are kind of framing these nickel ecosystems, is this bifurcation of pricing, and maybe more than that, maybe trifurcation. There may be lots of layers to this in terms of the pricing and therefore margins for companies, and therefore the cost of capital available to some of the companies looking to kind of insert themselves into the production chain, as it were. How's it going to work? How much credence is Indonesia going to get? Them wanting to do it is one thing, because it's kind of inward facing in a way. That system seems to be well established, and them kind of rebranding or repackaging it, does that affect the West?
It does, in sense of that the overall supply balance. But as I said, I've been a very vocal critic of this class 1, class 2 discussion in terms of nickel type. Again, nickel can come from anywhere and go to any market. There was a short-term dislocation, which we're now working through, but we'll be through that in about 12 months. For me, the fundamental bifurcation in the market is going to be high carbon Chinese controlled nickel from Indonesia, and rest of world lower carbon nickel. And so, the good thing is, for this has been shrinking for 6 years. This is getting, much larger. And so, I think you will see, particularly when the European carbon border mechanism adjustment kicks in 2 years on steel items, which include stainless steel, which is, nickel's big use still. That will, I think, help drive, a pricing difference between those, whether one trades at a discount, one trades at flat, or whether it's both a discount and premium. We'll see how that does. But I think you will see over the next 3 or 4 years, a real, pricing difference emerge between those two types of nickel going forward.
Right. And what does the what do the analysts think? That's what I'm intrigued by, because you've been a vocal critic of them in terms of being too cautious on pricing, etc. Do you think something like this is going to sort of give them a little poke in the side, and maybe they start to have to reassess how they view this market?
I think so. I mean, the problem is so many people have sort of dug into this class 1 versus class 2 argument, which is again totally it's a short-term inherently false dichotomy between those markets. But because they've been stuck in that for so long, they'll need to have an excuse as to why they've changed their mind. And so, and not admit that they're wrong. So I think this kind of move, if Indonesia follows through, will then allow all these analysts to I think, perhaps move out of this class 1 versus class 2 stuff that Tsingshan blew up with their announcement that they were making matte, and move into this new realm of Western nickel versus Chinese high carbon nickel, which I think will be helpful eventually for us. But I still think that's another 12 months or so away.
And where do you think Russia sits in all of this? Okay, compared to Indonesia or Philippines, they're not significant, but they are in the global stage. It's effectively a Chinese inward focused market, but Russia is looking for friends and allies. I'm trying to wonder how does this relationship, how does this ONEC build itself out? Would it invite friends like Russia in?
Oh, for sure. No, I think just like in oil, you've got kind of OPEC plus, and Russia, sort of has tagged itself along with OPEC. I don't think Russia would have any issues, whether Indonesia chooses to be itself, an OPEC of one, or whether they lump the Philippines in there. I think Russia would have no hesitation to join in if they can screw the West, or be seen to be screwing the West by participating in these activities. So yeah, I would expect if anything emerges, they'll be quite happy to join as an observer and coordinate activities on that front.
Okay, it'd be interesting to see. Well, one, if it happens, and two, if they're invited, or or indeed they put themselves forward to join. Well, look, interesting in the market context. Now, how do companies like yourself and your peers feel about this? How does that help your conversation, if any? Because obviously it's early days. I get it, but it's a nice sort of catalyst moment.
Oh, no, it is 100%. Again, the market doesn't get it. And the combination of this with the, Biden Inflation Reduction Act, a couple of weeks ago, I was in Korea and we talked, about how, this is really driving home to the Koreans that, the U.S. is serious about getting China out of critical supply chains. And the EV chain is one of those with their minimum content requirements. So again, I think, that fact that, okay, the U.S. is going to discourage any Chinese involvement. The Canadian government just this week, announced that they're going to force the divestment of a couple of Chinese investors, state investors in, Canadian listed lithium companies. So, that's really gaining some momentum. And then, when you throw in this supply chain risk of, oh, okay, these guys are really holding all the cards. Do we want to, leave ourselves open to having, 5%, 10%, 20% price increases, pushed on us by the Indonesian government? So again, it just, in today's environment, looking for, low political risk, part of favorable supply chains, that are going to emerge and continue to get reinforced over the next 5 to 10 years is, we had one trend for a long time in terms of could trade anywhere with anybody, to know we're going back a little bit into the cold world in terms of us and them. And, if you can be part of the us camp, I think it'll be a very profitable space to be for the next while.
Yeah, exactly. The flip side of the Canadian lithium Monday morning meeting,
yes,
it's an exciting thing. Hey, China, we've changed the password. You're no longer in the Canadian lithium meeting. Sorry about that one. But the reverse is exciting, because Canada is obviously looking to the US. The US is looking to Canada and friends like Australia across all the kind of commodities. Especially, obviously, we're focused on battery metals, but across all the commodities. Those conversations are happening apace. We've talked in the past about funding being unavailable, or hinted at, strongly hinted that it would be unavailable to any companies looking to supply into China as part of their sales. So Canada, big bold moves, probably not the last we'll see of that. And I guess the US will be making strides a little bit further north soon.
Yep. No, 100%. The US contacted us early. So it's I think it's going to be a pretty exciting 12 months in terms of how this is all going to, well, at least the next 12 months and the next 3 to 5 years as well as this all unfolds.
Well, I'd be interested to see the type of money and the conditions precedent on that money, because there's a lot of money swishing around that. We've talked, about government money coming into, other commodities. Lithium, I think, predominantly is the poster child at the moment. We're seeing OEMs moving further upstream. We're seeing strategics move upstream. Private companies trying to insert themselves into all of this. It's interesting times for sure. We will keep our eyes peeled for more on that as things progress. Just one company I wanted to talk about was Cannon Resources. Tell us a little bit about that.
So Kinterra, who's a battery metals private equity group, actually acquired them, and they're a late stage exploration company with a resource. But generally, what you've seen in terms of private equity is closer to pre-feas or feasibility studies. So again, I think it's I think there's a realization in that world, that again, there's so few opportunities. You can't wait, and again, given the market favorability to these metals these days, if you wait too late, it's just going to be too expensive a transaction. So you need to really identify those undervalued assets that you can pick up attractively. And again, shame on me for not following them as closely, but I went and I looked and I thought we talked about them literally I think a year and a half, 2 years ago. They had some decent intervals in a newer little area, but they had I had trouble even finding the news releases on the website. So just sometimes I think geologists fall into the thing of it will be self-evident to people that how great my deposit is, but you do really need to spend money on the promotion side. So, kudos to Kinterra to, picking up a decent nickel resource, at a very decent valuation. And will be interesting to see if we see more activity in the PE space.
For sure. Sorry, made me smile there. We reached out to a company recently run by a geologist, and he wrote back and said, is there a fee for coming on? He said, well, you cover our costs. You can come on the platform. It's fine. He said, I'm not sure. I think for that price, I could write 6 news releases and do 2 newsletters. So if you decide to reduce your costs by 75%, I'll consider it, said the $6 million company.
Yeah.
I didn't want to upset him by saying, the fact that you write them doesn't mean people read them.
Yes.
So you need a real balance. Junior mining, you need to get a balance of skill sets. People need to hear about them. That's for sure. For sure. Hey, well, Mark, great little summary there. I'm particularly fascinated by what's going to go on with Indonesia. I'm particularly fascinated with what the moves that Canada is starting to make. Pretty bold moves. Let's see how all that unfolds in the next few weeks and months. But in the meantime, nickel, reserve judgment for this week. We'll see what we think next week.
Yeah, for sure.